Hello traders, and welcome to the weekend update. Steve Gans here on Sunday. This is July 21st, 2024. And I'm going to, as I always do, take a run through our recently closed trades, look at our current open trades, have a little discussion on them, and then have a little discussion about our market patterns and expectations going forward. Now, if you're seeing this on YouTube, I do have a community, a paid community, where I share all of my trades as I make them, along with a video about why I'm opening the trade, how I'm opening the trade, etc. And in this community, I not only have these open trades, but I also have in the closed archives well over 100 trades where I have everything about that trade, the opening of the trade, adjustments in the trade, and then of course the closing of the trade and the final results. So those of you that are interested, I'll put a link down below if you want to find out more about that service and how you can follow along my live trades in real time. Now, I want to start off, I put an X in front of trades that have been closed. So these two trades were in fact closed this week. Now, this one is a bit this one actually isn't. This one was the frustrating one. This was a rut trade that was rolling along great and had very nice profitability in it. I had worked it over a period of a few weeks, had worked it into a position where it was a guaranteed no-lose trade, and it was up about $2,800 here about a week and a half ago. And then the rut had this massive up move that it just gapped and ran. And we're going to talk about that a little more here in a few minutes. And that did take a lot of the profitability that had been in this trade out of it. Now, I had an order out there at the time that the rut moved. I had an order out there to thin it even further, so that worst case scenario, rather than having $120 in profit, I would have ended up with about $1,500 in profit. Unfortunately, that order did not hit prior to the rut running up the way it ran. So it's kind of a pro-con sort of thing. Obviously, it was certainly a bummer that that decent profit disappeared out of this trade when the rut moved the way it did. But to the plus side, having tightened this trade up over the time that I was in it, it kept that rut trade from being a sizable loss. So this was one of those that, very frustrating to have given back some nice profits, but at the same time, it was positioned in a way that it would not get into a loss scenario. So, and again, those of you interested, every one of these is an adjustment. Well, one of them is the first opening of the trade, then all of these are adjustments and thinning along the way. Each one of these has a corresponding little video where I explain what I was doing, why I was doing it, etc. Again, all that will be available to those that are subscribers in the closed trade archives. Now, the second trade here was a double calendar. So this is another somewhat standard trade that I go to in the current market environment, the current market environment being low volatility with the potential of some pullbacks. This trade is a shorter term trade. Most of my trades will tend to be anywhere from 21 days out to as far as 80, 90 days. This particular trade is one of the shorter ones. It's about a 13 to 14 day trade in general. And I'm usually looking to get around 10% profit. This one had about 15% profit in it. So that trade is closed out as well. Both of these, after this video here today, I'll be moving those down into the closed trade archives. So now that we've looked at the ones that we have closed, I want to take a look at our current open trades. This is a fresh double calendar that was put on here on Thursday. Our market sold off quite a bit after this trade was put on, but the calendars are somewhat resilient, and if our market stabilizes here or bounces back a little, this should show some profitability fairly quickly. I've been in this trade 3 days, of which 2 of those are weekend, and there's 12 days left to go in the trade. So right now, unless we get some really bad market action, I would expect to be able to close this out for the normal, 10 to 15% that I strive for in a couple weeks time frame there. This is a broken wing butterfly that when our market had shot up significantly, I added a call spread expecting a market pullback, which we got. This trade, while it is showing down slightly here right now, this trade, in my opinion, is very, very well positioned. It's right in the center of this tent. It is showing a slight loss, largely because of the pullback and the increase in volatility that happened here later in this week. If the market does stabilize here, go a little lower, go a little higher, this trade is going to start showing some decent profitability here in the next probably week or two. Again, the only thing that would not be good on this trade is a hard another 100 point or more drop in the S&P. Now, I'm not expecting that right now. The futures haven't opened yet, but that's why I'm recording this later in the day. I want to see how the futures open here on Sunday. I'm going to circle back to this one in a minute because this one obviously is a challenge and problematic. This is a new broken wing butterfly that was just opened 2 days ago. I think this one was opened on Thursday. And I very much like this trade. I was able to get into it at a very good price. What it means when I get into one of these at a good price, it has a very good reward to risk profile. So under normal circumstances, this trade, if volatility is lower, I might have to pay $2, $2.10 or so to get into this 60-50 butterfly. And the thing I like about this trade is it has limited upside risk. And the less you pay to get into this, the less upside risk you have. In some cases, when volatility is really high, I can get into this for a credit, which means I have absolutely zero risk to the upside. This one wasn't quite that good. If I remember correctly, I think I paid about 35 cents to get into this trade. So again, it has a very good risk-reward ratio. It does have a very slight risk to the upside. But one of the great things about butterflies is they're pretty easy to adjust. So if our market does start ripping up here, this trade has 2 months left on it. If the market bounces and rips back up here, I should be able to easily adjust this wing to where I have no upside risk. Then the market could go as high as it wants, and I'm pretty much guaranteed a profit if the market stays anywhere above the 5,400 range or so. This was an earnings trade in Netflix. This was an earnings calendar. Netflix normally moves about 50 points up or 50 points down during earnings. That's what it's done the past 6 earnings reports. The expectations from analysts this time was 50 points up or 50 points down. Netflix, oddly enough, I put on a double calendar where the peak of the calendar was 50 points up and 50 points down, expecting that one of those might be the outcome after earnings. Netflix didn't move at all. It was really, really odd to have Netflix not move. So I wasn't able to close out that calendar at a profit. So I showed how I manage a calendar in that situation, and I rolled out my short strikes, turning this into a condor. Now, if Netflix stays in this general range of approximately 625 up to about 665, so a nice 40-point range. Again, this is after the earnings announced, so there probably isn't any major impetus to give this huge swings one way or the other. So if it does chop back and forth within this 40-point range for a couple days, I should be able to pull this off for a 25-30% profit somewhere in that range. That's what I'm looking to have happen. Of course, big market moves is going to force me to possibly adjust this if needed. Then we have Fortinet. And Fortinet did sell off a little bit. Now I'm doing what's called the wheel strategy. In this particular trade, I decided over a month ago that I would like to own long shares of this company. I went through a complete detailed analysis, fundamental analysis as to why I'd be interested in owning this. That also is all down in, for those of you that are subscribers, it's all down in this what I call circle in the service. And so I have the whole video where I analyze the fundamentals as to why I would like to own this, the price that I'd like to own it at, etc. And then I started selling puts on that in the hope and maybe not hope, with a game plan that if it stays above my put price for 2, 3, 4 months in a row, I can take in income off selling those puts. I'm basically getting premium for selling those puts. So rather than just going out and placing a limit order to buy a stock, which is what many stock traders might do, I can sell a put to buy that stock at that same price. In this case, I'm using 57.5 as the price I would like to own this. But I've already sold one set of puts. I sold those for, I think it was $2.20 or $2.50, something like that. So if I were to get assigned this stock, rather than actually having paid $57.50, I'd actually be getting into that for about $2.50 less. So my cost basis would be about $55. So I did not get put the stock, so I rolled out those puts, took in another $2.50. So now if I go through another month of not getting put this stock, if this stays above the $57.50 range, I'll be up, $750, and I still won't even own the stock. I am getting paid that amount to go ahead and place or sell that put, basically saying, yeah, I'm willing to buy it here at $57.50. And so by selling the put as opposed to just going and putting out a buy limit order, I'm basically taking in money each month as I do that. And if you wanted to be real, if you wanted to spend more time at this, you could actually sell those puts on a weekly basis. Of course, you're not going to get as much each week, but you'll be able to sell that put 4 times during a month, where I'm only selling it 1 time during the month. Now, let's talk about the problem child in the room. So this rut trade, I put this rut trade on as a flat butterfly. I put it on just before the CPI announcement that happened 10 days ago. Now, I got to tell you, I've been kicking myself over this one, wondering, what did I miss? How could I have been that wrong about how the market might rip? And just to give you some perspective on that, let me just pull up the rut here quickly. So this is the move. So I sold a flat butterfly. Now, flat butterfly does well if the market kind of stays in a general range. Flat butterfly does well if the market pulls back a little bit. Flat butterfly does not do so well in a massive run-up. Now, my flat butterfly, I was expecting just kind of a sideways chop after the CPI announcement, maybe a little bit of a pullback. That was my expectation when I put this trade on. Under no circumstances was I expecting a move like this. This is an astronomical move. And just to be clear, it's not just me that did not see this. I want to bring an article down here that actually one of the people in the community here shared with me. They subscribed to this report. And let me just share with you also the details on this report. It looks like a pretty interesting one. Those of you that are interested in it, this is the information to contact the people that put out this report. But a couple things I want you to note here. This was a +3, almost a 4 standard deviation move. That is virtually unheard of, except maybe in what we call dead cat bounces, like during COVID, after you had 5, 6, 7 days of relentless selling. You can get a rather vicious bounce back in the market. And so, this has only happened a few times, and most of these were bear market rallies. There have been virtually no times that there has been a rip up this massively in an index. It just was something that was, quite frankly, totally out of the blue. And the fact that it was as relentless as it was, the fact that it 5 days running just kept going higher and higher and higher and higher. Normally in a trade like the butterfly, when you have a massive movement like that, under normal circumstances, you would expect it to come up maybe to these previous highs, chop sideways a little bit, do a little bit of retracing, and then maybe it'll move up and make higher highs. That's kind of a normal path for a big market move. this path of gapping up right to resistance, and then the next day to have gapped higher. So I didn't adjust this trade on this day because it did stop right at resistance. My expectation was, all right, I think this thing's likely to at least stabilize here or maybe pull back a little bit. So that's what I was waiting for. Well, the next morning, it gapped up hugely, ran up. I'm thinking about adjusting it. Well, then it starts selling way back off during the course of the day, showing signs of weakness, again, making me think, all right, now it's done. Now that big, massive move is over. Only the next day to have it gap up again. Gap up, run up, and then it started to sell back off again, making me think, okay, run's over now. And then, of course, the next day, it just continues and just blows out the top, if you will. Now, of course, it's finally starting to retrace a little bit. But the point being on this is that obviously my timing was horrendous on this trade. Had I put this trade on one day later, it'd be a totally different scenario. All that said, this trade was put on 70 days out. So there is quite a bit of time to work this trade. And, am I looking for any massive amount of profit in this trade? No. What I'm looking for here is a reduction in my loss. And then after I get this loss, hopefully reduced a fair amount, again, I'm making an assumption here that the rut might now just trade in this new upper channel, somewhere here from 2150 to 2250 is often what happens with these. When they break out into a new channel, now they just kind of establish this new channel. Oftentimes the new channel will be about the height of the old channel, which again is pretty true to what seems to be happening here right now. So under that scenario, we just chop back and forth in that 100-point range here. This thing will decay, and I should certainly be able to improve this situation over time. But this is one of the few trades that I've had go against me really, really hard right out of the gate. And again, been kicking myself. What did I miss? What did I miss? What did I miss? But in doing all my research, whatever I missed, all the experts on Wall Street missed too, because they're all saying, I don't get it. How can this thing move 3 and 4 standard deviations over the period of a couple days? So that's trading sometimes. And this is where we learn how to deal with this adversity. How do we work our way out of a situation? So that's what I'm going to be doing here on this one, is finding ways to work my way out of this situation over the coming weeks. So that's the open trades right now. Again, the other two were just closed for profits, although not great profits. So now let's look at our indexes themselves. So of course the rut ran up significantly. It is selling back off. It may sell all the way back down here to where it broke out from, that 2130 range or so. And then I'm really expecting it to probably trade in the 2150 to 2250 range for the foreseeable future. I did want to take a look at our futures market. One of the reasons I'm recording this late today is, we did have some sizable sell-offs here. And if we look at the SPX going into the close, the SPX came right down to the bottom of a channel. Now it has touched the bottom of this channel once, twice, 3 times, came close a 4th time. Now it's right down at the bottom of the channel a 5th time. This channel has held for months now. My expectation at this point is that this channel is probably still going to hold. Of course, there's no guarantee on that, but I've got a couple things in my favor here. I not only have the channel, the bottom of the channel, but if we look across here, we also have a prior resistance area, and prior resistance busted through. Those prior resistance areas then often become support going forward. Looking at our futures market, we did gap up here a little bit in the futures market. Now, hard to tell where that's going to be come tomorrow morning, but at least it's for right now, the continued downside stress is not continuing on this. That's really what I wanted to see, particularly after the Joe Biden withdrawing, not a political statement one way or the other, just it's a big news event. Wanted to see what impact might that have on this situation. And at least right now, it looks like there's not a significant impact based off of that news event. So right now, ES is looking like, okay, it's holding its own. We might, in fact, get that bounce. So that's the SPX. Now also look at the Qs. Of course, the NASDAQ sold off. The NASDAQ did break down out of this channel. So it had been running in a channel pretty consistently as well, but it blew down through that channel. This is when the rut, this is what's called sector rotation. All of the people, the high-flying NASDAQ stocks, people started selling out of those, the NVIDIAs, the Apples, the Microsofts. They started selling out of those and putting their money into small caps and banks, which is what makes up the rut. That's called sector rotation. So the money to fuel that massive rut move had to come from somewhere. And in this case, people were selling out of a lot of their tech stocks in order to raise the money to hop into those bank stocks and small cap stocks. Now, the question remains here. We see this also is a bit of a support level. We came down here, it was support. Came down here almost to the same line, would have been support. Came down again. Is this going to be support? I don't know. Let's just take a look here at the NQ futures. I did not pull that up. And see, yeah, so those are looking up as well. So right now, my expectation is likely that this selling carnage is probably going to stabilize, and then we're going to expect some amount of bouncing here. So depending on where we're at tomorrow morning, I might even get as crazy as I normally tend to trade non-directional. But I might get so crazy as to buy a long call in the Qs, just expecting a bounce. And then if I buy that long call, I'll just make sure that I have a tight stop on it, if you will. When I trade delta neutral, I don't usually trade with stops because big swings in the market usually don't affect the trade that much. If I'm trading totally directional, I tend to be a little more interested in at least watching a stop and keeping a reward to risk in line there. So I may look at doing that tomorrow for those of you that are in fact in the community. Now, if this does break, the next line of support is going to be down here around the 465 range in the Qs. So, we could come down into that range and then maybe start to move a little higher from there. So those are my expectations in the tech stocks. And then we already looked at SPX, but we'll just look at SPY here too. We can see that the volume did increase in SPY during this sell-off. That isn't a strong indication of a bounce. This could be a little more of an indication of further downside to come. So I'm not totally convinced of a bounce here, but I do think if I were to put odds on this, which is the way I like to look at these things, I like to put percent chance. I think we're about a 60-65% chance that we will bounce from here, stay in this channel, and there's about a 35-40% chance that we might break down out of this channel, in which case we're looking to come back down here to the probably 537 range, somewhere in that general vicinity. So that is the weekend update here for July 21st. Again, I'll place the links down below for anybody that might be interested in the community and following along with some live trading. I'm not day trading here. I'm entering positions. I often have anywhere from 3 to 5 positions open at a time. They can be in various sizes. Most of them can be resized to any size that somebody might want to put on. And then I'm sharing my adjustments. I'm sharing the close of the trades. So on a given week, I might open 1 to 2 trades. I might adjust 1 to 2, maybe 3 trades. And generally speaking, they're not super time sensitive. I don't like to sit at my screen. I go out, exercise, and play pickleball, go on a bike ride, etc. during the day. So I usually check in about an hour in the morning and make any decisions I need to make. Maybe I'll float an order out there, see if it gets filled in a couple hours of time frame or so, and then I come back an hour or two before the close. Maybe I'll adjust an order if I have one out there. Maybe I won't. Maybe I'll just try again to get a fill the next day. So none of this is what I would call fast-paced trading, to where when I put something out, boy, you gotta get on it right away. That's just not the way I do things. So again, if that's not for everybody, I get it. I used to day trade for years, just not me anymore. If you're interested in a slower style of trading and you want to kind of see how that works, again, check out the link down below and it'll give you more information. So that's it for now, everyone. Take care. Thank you.